The perfect week for traders, the perfect week for investors, where markets have fallen from 15,000 to 14,350 back to the 14,800 sub levels. Myself, Brijesh Bhatia, in this edition of Momentum Moves, we'll be discussing a two asset class, not like the previous videos where we used to discuss Nifty as well as one of the sector. But this time we are discussing two asset class. One would be the Nifty and second would be the gold. So let's begin with the Nifty first. So this week has been a stellar from a point of view of trading. We have seen both bears and bulls moves coming into during the week. Though the weekly expiry was on a negative side, Friday start was seems like there is a big bearish move coming, but uh, the gap, which is the most debatable topic in the technical fraternity, that do gaps are filled, do gaps take support? Well, the classical answer to this is the today's or this week Nifty move, which we'll be discussing in our today's video. So if you look at the first chart over here, this is the Nifty daily chart. Today I'm starting with daily, not a weekly, though I will move on to the weekly later on. But look at the daily chart here. The green lines over here, the gap, the Feb start gap of 14,336 to 14,469, where we have seen a gap up opening, was held strongly on the to the Feb. March we saw the first half into the positive momentum. The first 8 10 days, second 10 days were on the slightly bearish side. But in this week, though opening on a Friday on a negative note, markets took right the support during the gap. Though the gap level was 14,336, we made a low of 14,350. And since then, we have seen a huge V-shaped recovery coming into the markets. And the answer is yes, gaps do take support. The gaps, there are various types of gaps. So runaway gaps, exhaustion gaps. So let's term this as I would not say the runaway gap, but the gap filled, marking a key bottom over here. And second point over here is, if you look at the gap over here, market, though during the week ended below the 50 days average, but in the end, and the weekend was that it managed to reclaim the 50-day exponential moving average, which was around 14,620 and closed above those on Friday. So, with the gap taking support, markets have also ended above the 50 days average. Now, if you look at the weekly chart over here, the weekly chart is very interesting. Look at the rising trend line right from the March lows over here. Market during the week breached those trend line, and we saw a low of around 14,600 was the trend line, and it went to the 14,350, but in the end managed to close above those trend line, which is very much important on the weekly scale, because these levels mark the key recovery shape, and the recovery levels are there. These levels are marked as a key support zone or key resistance zone. So in this case, the 14,350 will play a key support zone. Plus, if you look at the exponential, the 13 weekly exponential moving average was placed right around those levels where market have taken support. So we believe the multiple supports here with the averages, 50-day average on daily, 13 weeks average. Plus, if you look at the weekly RSI on the bottom panel, this is very much interesting over here. Though it has been trending above 60 for a long time now, and above 60 is basically still a bullish trend, and till it doesn't breach below the 60 mark, we think that this bullish trend would continue from the primary trend. If you look at the medium term trend, this is indicating the bullish trend. So till 14,350 not breach, we think that markets are into the bullish trend, and every dip can be an opportunity to go long. And if you remember, we have highlighted that mid cap and small caps are strongly outperforming, and still we believe that every dip, the mid cap and small cap should be eye. If you are an investor and looking for an buy on dip strategy, look for a small caps and mid cap stock. We still believe that mid cap and small cap have a huge potential on the upside. Coming on to second asset class over here now, the gold. What do you think if I said that gold is getting ready for $2,500 mark into the COMEX, or 60,000 mark into the Indian prices? Well, I have an answer to say so. If you look at the first weekly chart of the COMEX, let's start with COMEX because we are the price taker. Let's look at the international charts first. So if you look at the international chart over here, th- the support, the confluence of supports over here. The first, if you look at the rising trend line over here, the rising trend line as we mark the green lines, where markets has the price, stock price, sorry, the gold price have taken support over here. Second, if you look at the weekly exponential moving average, the 100 weekly exponential moving, every time when markets or the gold prices go down, so they generally take the support. So we have seen $2,000 in August 2020. Since last 6 months has been on a slightly negative trajectory, and we are back to the $1,700 mark. So here the 100 exponential moving weekly exponential moving average is also taking support. Now if you look at the falling channel over here, where prices have slow and steady going down and down, again the support of the lower line, the lows which are joined or connected, the support is also placed at right at the 100 weekly exponential moving average. So if you look at the confluence of support, 100 weekly exponential average, rising trend line, falling channel support line, all are meeting at same point of time. Plus, if I just look at the bottom over the year, RSI, the prices are forming the higher lows, while the RSI is forming the lower lows, which means that the bullish reversal is in place on the RSI. So we think that now it's a good time to accumulate the gold from a medium term point of view. Now, if you look at the second chart of COMEX over here, I've gone slightly lower now onto the daily chart. And if you look at the daily chart, the supports are placed on the charts similarly. Now, if you look at the lower panel over here on the RSI, the daily RSI has broken the trend line over here, which means that right from the oversold zone, it is moving on to the northward journey, and it has broken the resistance line, which is a trend line. Plus, if you look at the MACD, moving average conversion divergence, the averages over here are giving positive crossover into the oversold zone. Plus, histogram are going towards the positive side, which means that both are in sync with the price going higher. So we think that, again, I just repeat, the weekly rising trend line, the falling channel, the 100 EMA, bullish reversal on RSI, plus daily side. If you look at the RSI given a trend line breakout, MACD giving a positive crossover. So all this confluence or support zone is indicating that prices are getting ready for a bigger move from a medium term point of view, or from a 1 year's point of view. Plus, if you look at the MCX chart over here now, the Indian prices in the multi commodity exchange. Again, August 2020 high of around 56,000, back to the 44,100 levels. Now, we still think that if you look at the similar structure of COMEX and MCX, 100 weekly exponential moving average, yes, prices are taking support over there. Again, now if you look at second over here on the MCX side, if you look at the retracements where the rally was started, prices have taken 50% fib retracements right at the support zone. And if I just look at the candlesticks, I've taken a box over there. And if you look at the candlesticks, the bullish Harami cross, again, this is a reversal candlestick pattern, which means that after a short bearish momentum, prices are formed a doji within the previous body of the candle, which means that the bears are now getting exhausted. Till this low is not breached of 44,150, we believe that the reversal structure is taking place over here, and probably yes, 1 or 2 weeks it might consolidate, but overall we think that the prices are up, getting ready to reverse from current level. Now if you look at the lower panel over here, this is the 5 year chart, right from 6 years chart, right from 2015, and if you look at the RSI, the weekly scale, since 2017, we are the first time the RSI has tested 30 levels, which is the oversold zone. If you look at the similar 2015, we have seen RSI going below 30. So 2015, 2017, and 2021, this is the third time in last 6 years that prices have gone below the or tested the 30 weekly RSI. So, and every time this RSI is tested, the prices have made a major bottom, and the new rally has started. So we believe that the gold is getting ready for 60,000 mark, and it's and definitely one should look definitely for an investment, though you can look for ETFs into the Nippon ETF. We have already recommended our fast profits report. Second option is either you can go for souvenir gold bonds, which is an again investment class you can should look at. uh, this is an even looking at the MCX prices, where we still believe that gold is getting ready for a huge upside rally, and we are eyeing $2,500 on COMEX and 60,000 on MCX. So to sum up, again, Nifty 14,350 would be the key bottom mark. Till those levels are not reached, a buy on dip strategy should be implemented. And we believe that the medium term trend still remains bullish on Nifty. Onto the gold side, it's been trading at huge bargain buying level. Risk reward for the bulls is very higher at current point of time. At $1,700, we are eyeing gold again back to $2,500 in COMEX and 60,000 in MCX. So again, in investment point of view, gold still is been glittering. And this is, I would say, the best bargain buying level you can get into the 2021 on gold. So signing off. Before signing off, I request do click onto the subscribe button and do comment on our videos. How do you like? Thank you. Do not forget to subscribe to my email newsletters, Fast Profits Daily, and get a free guide on how to trade markets like pro. Thank you.